Today, we're talking about something many United States real estate appraisers rarely think about: European banking regulations. But these rules can have an effect on appraisals completed in the United States, and our guest will explain why. We'll be back right after the break.
ACI introduces ACI Sky Workbench, a cutting-edge cloud-based platform designed to streamline URAR appraisal report generation like never before. With seamless workflow integration, automated data management, and built-in compliance, Workbench empowers appraisers to work smarter, faster, and with greater accuracy. Visit aciweb.com for more info. You're listening to the Appraisal Buzzcast with your host, Hal Humphreys.
Welcome back, everyone, to today's Appraisal Buzzcast. We've got a really exciting one today. I know we get such great feedback when we look at valuation abroad. And today we've got Hal Humphreys, our host, speaking with Chris Thorne, a valuation expert based in the UK. Chris has been consulting with the European Central Bank as they review commercial real estate lending practices across the Eurozone. This includes how banks use appraisals, how they review them, and even how they source their valuers. Some of the reviews have been involved with real estate in the United States, which means this topic is more relevant than ever for our listeners. I'll let them take it away.
Chris Thorne, thank you for taking the time to be with us today. Let's start with an introduction. Please, if you don't mind, tell our people about your background and the work you do at RICS and International Valuation Standards.
Hello, Hal. The My background, I've been a valuer for very many years. I think last time I counted it was around about 50. And for the last decade or so, I've moved from the actual preparing of valuations to both for initially the standard setting side, and then also since 2015, I've been looking at the advising valuers on compliance and also getting involved with the users of valuation in particular. And an example of that is the European Central Bank, which is the regulator, the financial regulator for all the banks which are headquarters in the Eurozone, which is 18 countries of the European Union.
Okay. So the European Central Bank, most United States appraisers don't even think about European banking regulations. They don't think they affect them at all. I would imagine there may be some English valuers that think that the European Central Bank no longer has any impact on their work after Brexit. But why should we be paying attention to activity inside the ECB and the European countries?
The ECB, it's never actually had any influence in the UK because the UK never joined the euro. But it is does its job is to look after the euro and also all the banks that operate within the eurozone, and it does so in conjunction with the national regulators. Europe or the European Union differs from the United States in that USA was designed from the start to have clear divide between the federal level and the state level. Until the early 1990s, the European Economic Community, as it was then, was an association of countries which had common trade agreements, but they still had a lot of sovereignty. When the European Union was formed in the early 90s, it became much more of a regulatory body. The European Parliament could pass regulations and laws which are applicable across the whole of the European zone. When it comes to banking regulation, the EU or the ECB has to operate in conjunction with the national regulators in all the different countries. So although there are some high-level regulations which apply everywhere, once you get down to national level, particularly when it comes to the regulations about bank lending, who may value, what qualifications require, and everything else, can differ quite a lot. But at the top level, the principles are exactly the same. And they do have a common set of regulations, which are all based on the Basel Accords, which, of course, apply. I think it's to over 40 of the major economies in the world have signed up to that. So uh, there is a degree of commonality. But the real interest for listeners to this podcast in the USA is that um, some of the larger banks in Europe do operate in the USA. And during the work I've been doing with the ECB the last few years, I've certainly seen quite a lot of valuations done by US appraisers of real estate um, right across the country from east to west coast and outside the USA, away in places like Canada and UK. Um, they're big banks. They can lend wherever it is that they can find a borrower.
Yeah, and those regulations for the European banks end up being applicable to valuations done in the United States, even though the United States valuer is dealing with their own set of regulations. I'm
Yeah.
curious. So, just backing up just a hair, before 1990 and the making official the European Union, um, was the banking regulation just a kind of a cobbled together set of tacit understandings, and with the EU being formed as a body, then it becomes codified? Is that kind of how that worked?
Not quite. I mean, most countries in Europe had long established banking regulations and their own national or central banks that implemented them and applied them. But of course,
Okay.
they had many different currencies, uh, apart from, different languages, different currencies, different traditions, different approaches to the law. Some within their own countries had a lot of delegated powers to regions. Others had a uniform, it was a real mix. Um, and to an extent that still remains, but the EU has had got this, it takes a top level. So if you look at EU regulations, they typically are quite high level principles which people have to follow, but they do allow a certain amount of wriggle room um, when it comes to actually how they apply in absolutely every situation in practice.
Right. So in the States, we've got federal regulation on lending and valuation and how that works, but we also have state by state regulations that basically the understanding in the United States is the states cannot regulate at a lower level than the federal requirements. They are allowed
Mhm,
to add on additional regulations if they see fit.
mhm,
There's a push right now to um, it's called the State Harmonization Task Force, where they're
mhm,
trying to get the states to all kind of regulate valuation in the same way.
mhm,
Um, you know, why has I'm curious about the impact of European Central Bank regulations and regulatory authority on real estate appraisals in the United States. And let's be honest, and let's be clear about this. We're talking mostly about commercial lending.
yeah,
We're not going to be dealing with residential home lending. But
no.
why has the European Central Bank been looking so closely at commercial real estate lending valuations? And what is the connection between these reviews and capital requirement regulations in the European Union? And we've got similar capital requirement, regulations here in
Mhm.
the States. Talk about that a little bit.
Well, ultimately, I mean, as at the EU level and the ECB level, it is the capital requirement regulations that drive everything. I mean, they follow Basel, but again, Basel is again even higher level of principles. Um, and um, they, when it comes to real estate, um, it I think the ECB was concerned that they were seeing some inconsistencies didn't really understand what was going on, felt that some banks, banks in Spain might not do the same way as a bank in Germany. Um, to an extent, that's fair enough, but was that acceptable? How can they start bringing people together? And it's part of the role of this is try and identify good practices which they push the banks towards adopting, and I dare say push some of the national regulators into amending their rules to bring them into line as well. But that's a sort of a longer political process. But so it is quite a complex scenario. But um, it's one I think this project has now been running. I think it started in 2018. It really grew some legs uh, in 2022. Uh, when you had the sudden drop in uh, economic activity and a rapid increase in interest rates, which of course had significant effects in the commercial real estate markets, because you know, whereas people were previously splashing money around and borrowing at as low as 0.5% in the Eurozone, is suddenly they're having to pay 4% plus. That make quite a bit of difference to um, both the end property values and the affordability of loans. And that's why the banks stepped in to find out what was going on. Were the banks keeping these values under review? And it has revealed quite a lot of, let's say, questionable interpretations of what is meant by things like market value, and some fairly unsafe, or I'm not a banker, but to me, they look fairly unsafe practices in the way that um, uh, loans which are clearly in difficulty or in default and never likely to be repaid are being handled.
Yeah, so for real estate appraisers in the United States that are conducting appraisals under Uniform Standards of Professional Appraisal
Mhm.
Practice,
Yeah.
USPAP. USPAP does not envision a European regulatory body looking at the reports
Mhm.
necessarily. Um, in your opinion, what should U.S. valuers be considering when they're doing valuation work that may or that they absolutely know is going to be going to a European bank that may be going through this review process? And I want to talk about the review process in a minute, but what things should real estate appraisers in the States be considering when they're looking at projects that they know are going to go to a European bank?
Um, well, fortunately, I mean, USPAP, although it uses a few different terms and terminology, is basically very, very similar to valuation standards used in Europe, which are largely based on the international valuation standards. And in different life, I had many meetings with the Appraisal Foundation, and we went through and produced papers doing comparison between the two and say, well, yes, you know, we might refer to a special assumption, you might refer to an extraordinary assumption. What do they mean? And these weren't big issues. It was just, you know, ultimately we had the definition of, well, the IVS has one set definition of market value. There are multiple versions of market value in use in the States. And FIREA is quite sort of loose. It just describes a concept without a clear definition.
Yeah.
But ultimately, I think everybody interprets them as meaning much the same thing. So there are no real differences there. But it's just the fact is that I'm not sure how often this happens in the US, but the fact that a regulator will come in and look at their client and will then look at their reports and make sure that they are credible. You know, the brief we got was just, are these valuations credible? We don't want an alternative valuation, But if you look at a report, and the last one the bank did, as we found example results in 2021, and we're looking at this in 2024, and the valuation hasn't been updated in spite of everything that's happened, particularly in the office markets over that period. And just looking at the indices which are publicly available on the percentage by which values have dropped, and this is not being reflected in the bank's records or in their capital adequacy calculations, and that is a cause for problems. So the it's not really creating much extra work for valuers, but it does give them a bit of insight in how the valuations might be used and how they could actually just occasionally give a bit of advice to the banking about, you know, risks to the value they're just reporting. What could be the forward-looking risks? When you're considering when you might need reviewing this, you know, uh, are the markets particularly volatile at the moment? Is there an unusual degree of uncertainty because the markets are volatile? Making sure all that comes through, so the bank really has no excuse then for not taking that into account when it's making its decisions on lending and how often to keep that valuation under review. Um, I mean, we found that a lot of the banks have got good internal teams which are keeping on top of the market and reviewing it. The trouble is that's not always being translated into, we better get a new independent valuation here. Under European regulations, any lending over 3 million euros, that is, not quite a similar amount in dollars, has to have an independent external valuation done at least every 3 years.
Okay.
And therefore, the examples like I gave where we found some European banks operating through their subsidiaries in the USA were going longer than 3 years on loans which were in the tens or 20 million dollar brackets and
Yeah.
not keeping them under review had alarm bells going off.
Yeah, there's been a lot of talk here in the States about evaluations. And if you think about evaluations as either an internal or an external look at a property, you know, every other year or every 3 years, whatever the time frame
Mhm.
is, and do those constitute an independent valuation? In some cases they do, in some cases they don't. But what you're suggesting is, and I want to, I'm making notes as we go along. In the EU, if you've got a declining market, what are the problems you're seeing with valuations in a declining market? Say you've got an office building in Nashville, Tennessee, and
Mhm.
and this is purely hypothetical,
Mhm.
because I don't think any of this is necessarily true. But like, you've got an office building in Nashville, Tennessee, $20 million asset, whatever it is, and you've got a declining market. Um, you and I have had conversations. I've talked to other
Mhm.
people about people saying, "Well, I can't find comparables in this declining market. There are no sales." What are the things that the ECB is suggesting people focus on for monitoring value in these declining markets?
Mhm. Well, there's a couple of things here. I mean, first of all, the capital requirements regulations in Europe do have a requirement for banks to uh, monitor data and in sufficient granularity by property type and location to be meaningful, quite independently from commissioning this independent valuations, to give themselves an indication of where the market's going and, where they are in a market cycle, as part of their overall risk analysis. And in the latest version, they are not encouraging, I would say, but permitting and putting conditions on the degree to that is can be automated using artificial intelligence, that sort of thing. With the normal sort of thing with around AI, you've got to have human oversight, checks and balances, and all this sort of stuff. It can't be just all be left to a computer. Um, so. Yes, there is a duty on banks to be doing that. I suspect it's probably the same in, you
Absolutely.
USA as well.
Yeah, yeah.
So, sorry, your question is what sort of thing should what was triggering all this, and what's the problem of a lack of comparables? Well, you do get this. I mean, I did sit in meetings where after they've finished an inspection, which typically lasts 3 or 4 months of each bank,
Yeah.
They've got people on site, and they're not just looking at valuations, they're going through the whole of every credit file and looking at the records they've got, and particularly how they're calculating their loss given default, which you need for financial reporting purposes and all these sorts of things as well. Um, but um, on at least two occasions with major European banks, I've sat there in a boardroom with the bank's directors and the team from the ECB, and we say, well, the guy heading it from the ECB would be saying, well, uh, you haven't reviewed your valuations since 2021, and uh, you know the market's fallen. You just look at all the indices, you look at all the information available from whatever source you need to look at, whether that's MSCI or CBRE's indices, or which are available widely. Um, you're not writing down. Well, there've been no transactions, so we've got no evidence the market's fallen. And you think that, yeah, I just say open-mouthed that there's a naivety of senior bankers could be adopting that argument. Um, so clearly, I think, hope most valuers or appraisers would say, well, eh, yes, we don't have any firm comparables, but we're fully aware market appraiser is because we're in touch with the market. We know what's going on. We know what anybody we're prepared to buy at the current time, and we know what people, you know, might be prepared to accept. And it's it's having systems, and particularly in markets where the appraisers are closely in touch with the guys doing the buying and selling in the market, the brokers, they've got that intel and
Yeah.
can reflect it.
Yeah.
But if you're just relying on published price information, which by the time it gets through into the records is always going to be months out of date, you risk being well behind the curve.
Yeah,
So
behind the
there
curve.
are those
Behind
sort
the
of
curve is
cultural
not where
problems you've got
you
to deal with.
Yeah, behind the curve is not where you want to be when you're considering risk on a 20, 30, $50 million loan.
Well, exactly. I mean, I found it quite incredible that they were taking such I would say cavalier approach, but it was sort of well, unless you can prove it with a deal, um, we don't have to take any notice of it. Well, but the interesting thing, I mean, if we go back to the 2008 crisis, post-Lehman's, in the UK, most funds are required to have monthly, real estate funds, most required to have monthly valuations. And at the end of September, October, and December, there were virtually no deals there at home, but all the big firms doing this work, and we name the JLLs, the CBREs, the Cushmans, they're all in there. Basically, just pulled what information they had, talked to each other, and said, "Well, I spoke to so and so here. They would come into the market at yeah at a yield of this percent." Oh, well, that's it. That chit chat. But the result of all that was that for each month in succession, the um, uh, index was now the MSCI, and it was IPD in those days. It was walked down by about 4% a month
Yeah,
until
and that's
early in 2009. It bottomed out. We started getting deals done. Who was doing the deals? It was the German investors coming in. So they said, "Oh,
yeah,
UK looks good value at the moment."
yeah.
Transactions came. So there isn't this sharp divide between sentiment and the market. The two are totally interlinked, and valuers need to understand that and reflect it to the best of their ability. They've also got to be honest in their reports and
I
say,
think
look, we are basing this on sentiment.
I think that's
That's what they
that's
do.
that's a key bit of intelligence that I think it's important for us as real estate appraisers,
Mhm.
valuers to consider is if we are in tune with the market, if we are in tune with the people who
Mhm.
are actually playing in the market,
Yeah.
the buyers, the
Yeah.
sellers, the
Yeah.
brokers,
Mhm.
the large brokerage houses, that kind of thing, and we talk and
Mhm.
we share information back and
Mhm.
forth,
Yeah.
that, as you say, chit chat ends up being market-based intelligence that we can
Mm.
use to make
Yeah.
informed decisions. So
Mm.
I think that's a really, really good point.
LIA Administrators and Insurance Services, serving valuation professionals since 1978. We provide E&O insurance with a commitment to superior customer service, outstanding liability education, and unmatched claim defense. Explore our exclusive appraiser liability education by Peter Christensen and cost-effective seminars designed to foster your growth. Our underwriters, with an average of 26 years of experience each, are dedicated to supporting appraisers. Visit liability.com to discover how LIA can safeguard your business.
There's you're working on reviews revolving around these credit files and valuations and international adjustment and internal adjustments, that kind of stuff.
Mhm.
Talk to me about the role that you played with the ECB, and kind of describe your responsibilities, what they were in on-site inspections, and how you worked with teams to review these valuation reports. I'm really curious about that.
Well, the obvious one is why am I, as a Brit, acting for the European Central Bank? Well, it's interesting when they started advertising, they specifically wanted a valuer or appraisal um, with experience primarily based in UK or USA. They did actually include USA in their spec. It was never explained to me fully why, but having worked with them now for the last 4 years, and it's on a consultancy, part-time consultancy basis, um, I can get the understanding, as I explained earlier, each country in Europe has got slightly different systems, different, and by bringing someone neutral from outside to oversee what's going on, um, I think they felt comfortable here because if they'd gone for a German and they'd gone in criticizing a Spanish bank, you could see all sorts of.
We got
Um,
ourselves an international incident on our hand.
well, that's right. And I mean, what they do is every bank they go into, they will appoint uh, appraisers. They contract with appraisers on a short-term contract just to come in and review the valuations in that market. So you're always going to have people who do understand the market um, broadly in each country and also the applicable rules because in Spain you've got some quite strict prescriptions about what can be included in the valuation and what the valuation numbers can be and how the report should be presented. And you can only have they've got a select pool of valuers who can provide those initial valuations. So you need to understand all these sorts of things, and the locals can do that. My role there is just to provide some oversight, some continuity between all the different teams, and if they've got problems, and they want someone to bounce them off, I'm there, as the sort of second opinion, if you like. If they say, well, yeah, this is what I've come up with, and I think the value is somewhere between sort of 300 and 350 mil, but um, you know, where where would you come out? And we've had a few conversations like that, and I'm just there as a sounding board, really, to help them, um, you know, decide what the correct answer is.
Yeah, and I think that it has always been my understanding that the role of an appraiser, the role
Hmm.
of a valuation professional is to, by and large, there are some exceptions to this, but by and large, we are brought in as a disinterested, independent, third party
Hmm.
to look at this transaction, look at this situation,
Hmm.
look at this property, and apply the rules, you know, economic theory, those kind of things to provide an independent, indication of
Hmm.
value. And it seems like that is very much your role in that setting. You don't have a dog in the fight,
Hmm.
but you understand the rules and you can sit there and take the information they're talking about and be that independent third party that says, yeah, this makes
Hmm.
sense, or you didn't think about this.
Yeah, yeah, yeah. I mean, I think it's it's been an interesting education for me because it's forced me. That's what's you can guess from my hair color is towards the end of my career, um, to look at what I've been done for so long from the other side of the fence, and I'm quite enjoying the different perspective it gives me on a subject I think I know pretty well.
Yeah, and I think, Chris, here's the thing. I think for us appraisers, especially here in the States, we tend to, my appraisal practice for the past, several years has been a solo practitioner doing valuations on residential properties.
Mhm.
And you can kind of get stuck in a rut doing that work and not think about the bigger implications of what it is we do. I had somebody describe a rut to me years ago as a rut is nothing but a long, shallow grave. But I think it's good to think about these things and kind of step back and think about the bigger picture of what it is we do. Um, Chris, I can't thank you enough for taking the time to be on the podcast with us today and talk about some of these high level issues. In my notes, I made a couple of notes about we brushed against standards a couple of times in our conversation today, and kind of tell me if I'm thinking about this in the right way. When it comes to standards and rules for valuation, IVS and USPAP, not the same, but very similar. Those are kind of top level understandings of how to go about the practice of valuation. When we get to the state or the independent country or whatever level, those rules become a little bit more granular, a little bit more detailed based on the needs of, the jurisdiction. But when we think about standards, IVS, USPAP, kind of the top level standards of appraisal, those are the broad brush um, rules within which we play. And we might find ourselves dealing with a little bit more granular stuff as we get to ECB, the United States Central Bank,
Mhm.
state or country level issues. Does that seem right to you?
Yes, and I think one of the things I found when I first got involved, I mean, the RICS first nominated me to go and be their representative of IBS. A lot of tension between people thinking that the IBS was going to replace national standards. It can't. Um, I mean, if you look around the world, when in the financial markets, there are various global bodies that set high-level standards and regulators. Basel Committee, obviously in banking. You've got IOSCO, which is for securities and financial markets generally. Um, they are virtually clubs of national regulators who see the benefit in getting together to agree common principles, which all go away and then implement in slightly different ways in the legislation in their own country. But they're all following the basic set of rules. And that's where IVS is gradually positioning itself and becoming recognized. It's not imposing itself as an alternative or trying to sort of take over a national standard. Um, and even though that might have been what some people back in the 1990s might have thought they were trying to do, um, it's much more now about trying to get this sort of a global consensus on the basic principles. Yes, you can go away and fiddle around with some of the detail. You can change the words here and there if they make more sense in your jurisdiction, but you're still ultimately trying to get to the same place.
Yeah, I mean, at the end of the day, Chris, we are separated by a common language.
Well, yes, yeah. I mean, we can say that about the English language, but you could tell me the biggest problem, and naturally I wasn't involved in it myself because I don't speak the language in any of its forms, but the time it took the various Spanish-speaking countries between Spain, Central America, South America to actually agree each translation of the international valuation standards was absolutely extraordinary.
I
Um,
can't imagine. I can't imagine because you've got Castilian Spanish, Galician Spanish. It's kind of all around the world in different areas. So yeah,
yeah,
that alone would be difficult.
Yeah,
Chris,
yeah.
thank you so much for taking the time to be with us. I've enjoyed this chat a great deal. I always like the chance to sit down and talk with you about on kind of the broader issues. Um, let's see, this chat about global regulations and international banking practices and how they can affect appraisers in the United States. And let's be clear, my audience is primarily here in the United States. So
Mm.
thank you for taking the time to come sit with us and talk about how some of these kind of broader standards and regulations might be impacting U.S. appraisers. We really appreciate your insight and your time.
Yeah, my pleasure. Thank you.
And if we have nothing else, for Jim Morrison and Chris Thorne, I'm Hal Humphreys, and that is your Appraisal Buzzcast for this week.